Never tease Doc if he wasn't super cool. And Doc, by the way, Doc lives the dream for a lot of traders out there, because Doc is a former telecommunications product manager who left a six-figure income to pursue a career in trading. And obviously he has done it. Today he's going to be talking about capturing consistent weekly profits with weekly options. Now, his transition was made possible by his discovery of the power of flexibility of options, allowing him to generate income in various market conditions. So bull market, he's making money. Bad market, he's making money. Since 2005, Doc has been mentoring retail traders, assisting them in achieving independence in their trading endeavors. Now, currently, he collaborates with the guys over at 12-Minute Trading, where he oversees the live daily Target 100 trading room, providing guidance and support to traders. Now, the thing I like about Doc is not only is he a good guy, but he's a really good teacher. You guys are going to love this. Guys, you've probably heard of him. This is Doc Severson.
Well, thank you very much, John. Let me get the screen sharing going here. Okay.
Now, Doc, we give you full control of the ship. We mute ourselves and turn off our cameras, and it's all up to you. We got a rowdy group here. You can ignore Don if you want to, by the way.
Okay, I gotta find the sharing here, and
should be at the bottom, a little screen, a little green button.
Yeah, almost there, guys.
Boom, you got it.
Okay, we all good?
Yes, sir. We can see it.
Okay, fantastic. All right, so thank you again, Rod and John. Appreciate you guys. And this is my first time with you gentlemen, so I'm looking forward to this one. And you guys have been first class all the way so far. All right, this is what I like to do here. I like to give you guys a visual of what's going on. So I like to walk from the left-hand side, left-hand corner, up to the right-hand corner of this. And tell you what, no, I'll keep it on. I'll keep the video on here so you guys can see my reactions all the way through this, and hand signals, everything like that. So this is kind of like the old cartoons when we were watching when we were kids, where you'd follow the bouncing ball. So that's what I intend to do here. Again, my name is Doc Severson, and I've been doing this, like John said, since 2005, where it took me about 18 months from the point. It was almost like one of those moments where I was at a workshop, and a bad day at a workshop was better than a good day at the office at that time. And all of a sudden, some guy starts talking about options, and it was like a bolt of lightning. It hit me like I just figured out what I wanted to do with the rest of my life. 18 months later, I actually turned in my notice and quit my job. So I have been an individual trader, and then I became a performance coach shortly after that, because what happens is, when people find out that you quit your job and are trading for a living, they will beat a path to your door to say, would you please show me how to do the same thing? Because that is a universal, need and want from just about everybody I've ever talked to, is like, they want to get rid of that, that cubicle farm. They want to get rid of that dead end job that they're at and be able to do this for a living. What I also found was, when I started doing it, it's very isolating. Right. So a lot of people might say, well, if you're trading, making money, like, what else? Why would you not just sit at home and read books and play golf and stuff like that? What you find is that it's extremely isolating, and it actually is detrimental to your trading, because you get into this bubble, you get into this vacuum on your own, and it's extremely isolating. You have no contact with anybody else. All the people you used to eat lunch with at work, they're all gone, because it's just you and the dog. So what I found was, helping other people made me a lot better at what I did as well too, because all of a sudden I had accountability. And accountability is extremely important if you know anything about how the brain works. So I've got a couple of books that are on here, which I've written through my experiences. So Hacking the Holy Grail, this is available on Amazon. What I found was, I had I couldn't understand why I was making such boneheaded decisions when it came to the market. So I do well for a while, then make boneheaded decisions like, why am I doing this? And as it finds out, all of us have this sort of lizard brain that we're baked into, and it will prevent us from making money until you find ways to think differently about the market. So I had to learn all that neuroscience. I had to learn how to think differently around the market. So I wrote a book about it, Hacking the Holy Grail. It's a lot of fun. And so the other book that I've got here is Fractal Energy Trading. This is about the system and the method that I use, which is multiple time frame analysis. So looking at multiple time frames, understanding how really markets are more like nature than anything else. And you already know how nature moves. You can use the same things towards improving your performance in the market. Okay, so those are available on Amazon if you want to know anything more about them. Other than that, let's get going here today. So my purpose in talking with you guys is a couple of things. Now, first of all, I want to keep you on time today, try to get you out of here at the top of the hour. I want to see today's small investor get started without taking advantage of. I think there's so many charlatans in this business that you just can't trust. They're here to make a buck and they're not here to help you. And this is what I love to do. And this is what I will stake my reputation on, is helping people. This is what I want to do. This is what I love to do. I want to see the small trader win. Now, there's also something very compelling about the natural edges inherent in option selling. I'm sure you've heard about this all day long. But that, when you combine that with the new structure of options, which has been available since last year, we have some very interesting edges that are available to the retail trader now that puts you on par with any institution. So my purpose today is to make you aware of them, show you some setups. So I want to educate you guys here today, in general, help you decide if this is something for you or not. So stick with me for 45 minutes. I'm going to walk you step by step on how to start creating income with a simple trading strategy, puts your odds in your favor, and one that you can start using tomorrow if you wish. Okay, more directly, I want to show you how to win greater than 90% of your trades and make current numbers right now for me are more than $1.70 in profits for every dollar of losses, which is printing money. I want to show you how you can create consistent results as well too. So why are we here? Everyone is trying to set themselves up for financial freedom, but using yesterday's methods won't work anymore, right? So the old paradigm was to grow your pile, get as big of a pile as you can of money, and then you've got enough to be able to live on through the rest of your life, right? Grow your pile of assets and then live off of the interest. Live off of the interest. Are you guys seeing this, the videos, are those in the way, or are those not being seen by you guys?
We definitely see your screen.
Okay, so the little videos that we're showing, you guys don't see those on the side. So those are, I'm just trying to figure out if I'm blocking anything on the screen with these, the live video feed.
No, not at all. We see live off the interest, and then we see the next slide, which says the problem is.
Okay, fantastic. Okay. I hope I'm getting the right screen up.
Well, you just said, and then live off the interest. The old standard was to build up $1 million, and that's what it says on the screen.
But you're seeing that on the entire screen, right? You're not seeing the problem is then.
Oh, I am. We're seeing, but the problem is we see, like, I'm assuming that's the next slide.
Oh
yeah, because it says the next slide on top.
Yeah, I may be on the wrong, let's see. I want to be on this screen. Let me try this one here.
Ah, you're using double screens. Nah, that's it. You got the full screen.
Okay, so I got the full screen here now. Okay, so that's what I should be on. Now, John, can you tell me, are you seeing the little video feed off to the side?
Nope.
It's not blocking anything? Okay.
No, and just to be clear, I don't think anything that you were doing before was throwing people off. People could see it just fine. I was following along.
That's cool. All right, great. Thank you, John. Okay, so the whole idea is to build up the pile, live off the interest. The old standard was to build up $1 million and then live off of 50K a year at 5%, right? So we could do this. The problem here is that interest rates are creeping up, but we're still well below the annual rate of inflation, right? I think we're all aware of this. So we have these current alternatives to interest income. If there's no interest income, we can go through the traditional annuities or bond yields or stock dividends. A lot of you have already heard about these kind of things. These are what I would call the traditional methods of augmenting returns, but I think they're terrible in today's market. So whether it's interest, annuities lucky in for years to receive a small return, bond yields are still pretty bad unless you're getting 3-month treasury bills, which ain't bad, right? Stock dividends are not a holy grail. You can be upwards of 7%, but you're going to pay for it with a lousy chart like this one here. So this means that you can follow the old paradigm of growing your pile of assets, but being able to make money on your money is no longer there. So retirees are going to be shredding through their principal in no time, wondering what changed, even though this has been happening for the past 2 decades. In the words of Private Hudson from Aliens, what do we do now, man? Game over. Well, I don't think so. I don't think it's that bad. Income is going to come to the rescue. Income is what we once received through interest and dividends and bond yields. So how can we replace this? We need different forms of passive and active income that can work to replace the old vehicles like annuity, interest, and bonds. Passive income is earned without active participation. That's interest and dividends, et cetera, right? Yeah, that was a great movie. Active income requires participation on your behalf. So this is typically like job, right? J-O-B, where you trade your time for money. That's active income. So we're going to use different forms of these. Now, can we use stocks for this income? Stocks, just trading stocks alone. Stocks are still expensive even after the bear. Even now we have the major leaders in the NASDAQ, which are back at all-time highs again. They're not cheap. Requires a massive amount of capital to trade the market leaders. Day trading stocks requires too much capital for smaller accounts, and we've got that irritating pattern day trader rule, which is very, very restrictive. Vasquez, I love that quote. Yeah, that's fantastic. So options, to me, are the answer. Using options allows us to replace our interest income from the old paradigm methods. Passive income, we can sell longer term options to act like an insurance company. So you'll hear me use this analogy quite often here because that's in effect what we are doing. We're becoming an insurance company. We're taking a small bit of risk out of the market. We're being paid for that. And then we're hedging off the backside. We can also use active income. We can look for short-term opportunities to either buy or sell options, using the leverage of options to more efficiently use capital than stocks. So to me, options are a perfect vehicle for creating income. So if you haven't traded options before, a lot of people, I saw people in the chat saying, hey, if I'm new to options, what do I do here? Well, believe it or not, you actually have used options in your daily life. If you've ever used a coupon or bought an insurance policy, you've already traded calls and puts. We use a very simple combination of options to earn income. I think that anyone can do this if you're dedicated to it. So my assumption for today, since I'm working with Rod and John here today, this is an advanced trading webinar. I'm going to skip the usual background on options and get right into the strategies, if that's okay with you guys. If necessary, we can take questions on the back end of today. Otherwise, what I found is if I take questions during this, we'll never get done, right? So the question on the table here, how do we generate active income using weekly option strategies? And here we go. So I'm going to talk about earning $100 a day. Now, when I talk to people about earning $100 a day, I usually get a lot of guff from folks like, oh, $100 a day, that's not going to do it. You know, I earn way more than that at my old job. I need to earn $5,000 a day, et cetera, right? So I don't care how much you need right now. What I'm saying is I want you to start somewhere. So earning $100 a day doesn't get people all worked up and excited and stuff, right? So it doesn't sound like much of a goal. You may have made significantly more than that in your job, but you must start somewhere. I don't care if it's $10 a day. I want you to start to get positive momentum because the human brain operates successfully when you show it positive results every single day, even if it's micro progress every single day. So if I were to go up to you, if I were to meet you in an elevator and have a 30-second talk with you. And I would challenge you to say, hey, can you get 1% better at your trading between today and tomorrow? 1% better. Can you do it? And I think most people, most of you out there would say, absolutely, I can do 1% between today and tomorrow, Doc. I can, work at my stops. I can work on understanding deltas a little better. I can get 1% better between today and tomorrow. I'm like, okay, great. You come back the next day and you definitely result with 1% better. You're better than 1%. All right, now do it again and again and again, every single day. If you get 1% better every day over the course of a year, you're actually almost 38 times better at what you're doing today. Imagine being 38 times better at what you're doing today by the end of the year. Imagine how effective that you can be. So this is the key to success over time. It's little incremental steps getting better at this stuff. So I don't care if you're making 10 bucks a day. I don't care if it's $1,000 a day. What I want you to do is to find something, focus on it, and get better and better and better every single day. That is the key towards performance. Now, we use what's called an income pyramid. So some of the majority of our capital, it's almost like build a foundation to a home. What I see so many people want to do is they don't want to start by digging the footer and getting all dirty and muddy and pouring the concrete and stuff like that. They want to start right with the second floor of the house, and then they wonder why it slams to the ground because they didn't build up a foundation. So I want you to build a foundation for your trading, like put most of your capital into some of these really slow, conservative strategies, build up from there, build on top of that. As you get this settled up, as you get a good, strong foundation, then you can start to build into equities. I mean, everybody should be using an index or an ETF and not individual equities until you get better at what you're doing, because there's so much more risk in individual equities. So why bother doing that? An index does not have earnings, nor does it have a CEO that goes wild, right? So we use an income pyramid for this. And your approach, a lot of people say, well, what's my approach? What should I do? Well, you've got a different combination of capital, the amount of time that you have to put into this, as well as your current knowledge right now. So all of that comes together in the Venn diagram in the middle here. Everybody's got a different combination of capital, time, and knowledge. Now, what I would say is give me somebody, let me work with somebody who's capital constrained. I don't care how much money you have. Give me somebody that only has 15 minutes a day, or maybe even 12 minutes a day, right? So give me somebody that doesn't have much time during the day, that doesn't have much money, but also give me somebody that's willing to learn and understands the concept that there is no limit to the amount of knowledge you can pour on. And what you learn, you will retain. So give me somebody with that. Actually, don't give me somebody with unlimited capital, unlimited time, sitting around all day saying, I want to make a whole pile of money and I don't really care how much I know. That person will probably end up burning to the ground, right? We've seen that before. The amount of capital that you start with really has no bearing in terms of the trajectory of how fast you succeed for this. So give me that person that's got those constraints, but understands that knowledge is the most important thing, because you will go far and you will go fast. So it is easier with a larger account. No kidding. I mean, it's not hard to say that. So we could just sit there and play the wheel strategy on Apple if you've got thousands and thousands of dollars, and it's easy to do, but most people don't. And I'm seeing that through the comments in the, like, how much capital do I need? Let's all assume that you don't need very much to be a good trader if you're going for active income. Now, something else I want to talk to you guys about is the power of one thing. I had gotten to a point in my career, I had put so much into my education, I'd put so much into my training to be a trader. That's all I wanted to do. It was what I focused on. Morning, noon, and night was getting better and better and better as a trader. I knew a lot of stuff. The problem was, like many retail traders, I wasn't making any money. So I mean, it's so frustrating, right? You go to a party and all you want to do is you talk to people about trading. You're like, that's all I wanted to do is to talk about trading, but I wasn't making any money. And the thing that made the difference for me, what I did was I literally swept my desk off and it said, that's it. I'm tired of this. I'm going to pick one thing. I'm going to pick one strategy, one chart, one option chain. That's it. And I'm going to master that. And I will not quit until I become a master at that one thing. That was probably the smartest thing that I did without really realizing it at the time. Now, I saw this movie called City Slickers a while back. It's been around for decades. It's a movie with Billy Crystal. It's about a bunch of guys coming from New York, and they go out to a dude ranch, and they learn to be tough, right? And they follow Jack Palance, who is Curly, the cowboy. You know, what's the secret to life, Curly? Hold up one finger. It's just that one thing. That's all you got to worry about. And so that's what I found was the key towards trading success is picking your one thing. And that's what I tell everybody that I work with is you got to find just one thing. I don't want you out there trading 42 strategies with 58 stocks in your watch list. I want you trading one thing and don't move off of that until you get what you want, because that actually will speed up your success more than anything else that I can think of. Master one thing and then look to diversify. We all start in the opposite direction. Right off the bat, we're told to diversify, and we wonder why we don't get anywhere. Don't do it backwards. So today's focus is going to be on active income using weekly options. We're going to seek to make a specific income goal per day, and we can skip days to avoid PDT issues if we're trading a smaller account. Okay, off we go. Now I want to talk to you guys about 0-day options. And I'll go through this quickly. Hopefully you guys know something about this. Weekly options themselves were released maybe 15, 17 years ago, sometime like that, where all of a sudden the magic of the Friday option, it used to be, believe it or not, that this is all that we had. We just had these great big monolithic monthly options in everything that we traded. And you had to play the same monthly options for literally, you know, a month or two until they expired. And then you moved on. You just kept going on this rolling thunder approach. But now we got all the options that we could ever dream about. But it doesn't stop there, because the S&P, as of last year, the SPX actually went to full 5-day options. We now have daily options every single day. And I'm probably not going to be too long before we're going to have hourly options too, if there's a market for it. So that's actually the binary options, which have been around for at least a decade now. They have hourly options, or at least it's very difficult to make money with them, though, because they're so illiquid. But we'll see what happens with these. But now we have daily options. So today I was trading 7 June options today. Tomorrow I'll trade 8 June options. The NDX, or the NASDAQ 100, also has 0-day options. We have the ES, which is the futures for the S&P 500, and the MES, which is the micro E-minis, also have 0-day option series. So we have no shortage of these. Can you tell which chart I prefer to trade? The spiders and the Qs now have 0-day options 5 days a week. Now the IWM, which is the Russell ETF, the diamonds, which is the Dow, those don't offer quite as many. So they're a little bit less, a little bit harder to operate with them. Now, what's cool about this is that these options expire today. So imagine this raging fire. That's a fire. The other side of the room, you walk into the room, you're holding an ice cube in your palm. So there's going to be a certain amount of passive melt just with the ice cube being in your palm. But what you find is that the closer and closer that you get to this raging bonfire over here, the heat that's detected by that ice cube changes with the square of the distance. So the closer that you get, the faster it starts to melt. And so this is what happens with these things is literally we start out at 9:30 in the morning Eastern time, and then by 4 o'clock, they're gone. They've melted into the ground. So these options expire today. So these are very sharp instruments. If you are just now learning to trade, I would recommend that you start with something a little slower than these 0-day options. This is not the place to learn. I would start with these big, slow, like the income pyramid that I talked about. Learn how to trade with the very slow stuff, right? Don't be in a rush towards this. Don't be in a rush to be successful. It will come to you. So consider extending the trade out over a few days or a few weeks to slow things down until it's kind of like when I was growing up, we had these, well, I think we still have them today. We have these baseball pitching cages, right? So you'd step in, you'd throw a buck into there, and then you get 10 fastballs at different speeds, right? So you could go into the 40-mile-an-hour cage or the 60-mile-an-hour cage or even the 80-mile-an-hour cage. Don't start with the 80-mile-an-hour fastball. Was it true? I saw somebody throwing like 104 the other day. Crazy. Now let's talk about strategies. So here we go. We're going up to the good stuff here. Here are some of the benefits. So for a long directional trade, I want you to think about the physics behind this, or just the probabilities behind this, which none of us think about. This is the way that all of us start trading, right? We all start trading either stocks or long call options like this. So for a long directional trade, you're going to either see the price go up, down, or sideways. Okay. This equates to a 33% chance of winning or less on an outcome basis. You've only got a 33% chance of winning that trade. Since an asset trending sideways shows opportunity cost. So you don't get this one for free. That's opportunity cost. It's just tying up your capital, doing nothing with it. That is considered a loss. So on an outcome basis, there's only 33% chance. Now for a neutral options trade, you're going to see the same thing, up, down, or sideways with the price, but this time, if the price goes sideways, you win. You win that trade. And when I discovered this, I was like, whoa, this is awesome. All of a sudden, for a new trader to be able to get the confidence of starting to learn to win, it's extremely important. It completely reverses the paradigm that most newer traders go through. So to me, 67% is better than 33%. Learning to use probabilities to increase your winning rate, one of the most liberating principles in trading. So let's talk about some strategies here really quick. The short strangle, where we sell a put. So I'm just going to put a short put here, a minus P, and we're going to do a minus C up here, short call. Short put, short call, short strangle. This is the king of option selling strategies used by professionals. What's the problem here? The problem is the margin required due to the unlimited risk profile is pretty hairy. So unless you're doing portfolio margin, unless you're doing a big account. Now, a quick aside here, you can do this with Tastyworks on the micro E-minis. So even if you've got a relatively small account, you can pursue the king of options selling strategies with the micro E-minis. Got to be careful though. Now it's using a different form of margin. So the problem here with the short strangle is lots of war stories out there from newer traders getting blown out due to the unlimited risk curve. So what we all learned to do, and I'm sure you heard about this today, is go to one of these iron condors, these super wide iron condors, maybe with, say, like a 5 delta or something like that, where we're, 5%. So 5 delta, sometimes they even go higher than that. And man, when I first learned about this, I was like, this is awesome, man, a 5%, 95% chance of success on each side. And overall, about a 90% chance of success for the entire trade. So it caps the risk. I use less capital, but I still have a pretty big bogey down here. The risk on these is still pretty bad to the upside and to the downside. So being an iron condor trader, you're never happy, no matter which way the price is moving. So for this style of condor, probability is increased by using a lower reward to risk. So we're trading that off. So it can be very difficult to play this during low volatility markets like we've seen lately. So in 2022, this was the strategy. This was awesome. So 2022, this was a terrific strategy. because we had elevated implied volatility. And then that all went out the door when we got to the new year. In 2023, all of a sudden, all of that evaporated. So what do? You trade what's called the low probability iron condor, where we set the risk and the reward to be the same thing. For this style of iron condor, the probability is decreased using a higher reward to risk. This actually has some huge advantages. Now, you might look at this at first glance and say, well, that's no good. That's so narrow. How am I supposed to fit within there? There's actually some huge advantages because your time risk is so much less. It's so much faster. It's terrific for smaller accounts as well, too, because the margin, instead of the margin being something like $1,000 per contract on the high probability, can be down to $250 per contract. So this is a much better strategy for smaller accounts. Or we could collapse the entire thing and go into the iron butterfly. I'm not going to talk too much about this today. This is what I use on an intraday basis. Okay, the width is sacrificed for speed on this trade. And also what we can do is a calendar spread. Again, I'm not going to talk too much about this today because it is a little bit more complicated, does require a little bit more experience for you to handle because you're dealing with so many more dimensions. All of a sudden, volatility is much more of a variable that comes into play with these strategies because of the long Vega component. Okay, so set up correctly, it can also be a very rapid trade, can be faster than your typical out of the money, high probability condor. So you do not need to learn 42 different fancy sounding option strategies. You really don't. That used to be the thing when I came on board, like, hey, we're going to show you like Batman's tool belt. We're going to show you all these strategies. So you have the exact one for the exact right. You don't really need that, right? Just a handful properly applied, correctly managed strategies will work to create consistent income. What you find is, after being in the business, what you find is the people that do this for a living actually run fairly crude systems. It doesn't, it's not all that complicated. It's actually fairly simple. So sometimes it takes a lot of experience to make something simple. So again, you're following an insurance company business model by taking the risk out of the market. You're being paid for it by those that want to offload their risk. This is how we're going to make that daily income. Okay. What are we going to use for analysis techniques for this? This is where we get into the religion of trading. There are two schools of thought in how to time entries. Now, if you talk to the people in Chicago, they're going to say, people that use charts, they belong at the bottom of the ocean with all the other sunken galleys, right? So people in Chicago are random walkers. That implies that there's zero knowledge about forward price action. Forward price movement fits into a log normal distribution of price, right? So you've all seen the mean distribution curve typically looks like this. So everything that they do fits into a normal distribution curve. And then there's the rest of the retail traders, which are technical analysts. That implies that we can project forward price movement based on past behavior. So these two schools of thought hardly ever find middle ground. So why not use both of them? That's my point here, is why not use both of them? So random walk analysis, I can use the expected move to find plus and minus one standard deviation distance. I can use option delta to find the probability of success for that trade. We want to place positions outside of the expected move when we can, and we want to target positions at a specific delta. This gives us consistency for profitability. So something I could do, like here on the option chain from this morning, is I'm looking out at the option chain for the 13th of June, and I can see that it had, as of this morning, a 50.3 expected move, plus and minus. So I can take the current price at 42.73 and say, okay, what's my one standard deviation distance? And so that's going to be 42.73 to the upside, I'm sorry, that's the current price. So the upper envelope is going to be 43.23, down to 42.23. That's the nice thing about having a 50-point move here. That makes the math easy. So we can look at this and say, hey, we could trade this 42.15 put. It's outside the expected move. Very good chance of expiring out of the money. We can also use technical analysis. Our goal is not to predict the future with TA as many try to. Really, you can't. What we do is we use it to augment the statistical analysis of random walk. And I'll show you what I mean by that in a minute. So I'm going to use what I call fractal energy trading analysis. So fractal energy means that we're going to use multiple time frames. Number one. Number two, I don't believe in this concept of overbought and oversold. So people say, oh, it's overbought. It's got to pull down from there. Well, I've seen this kind of thing happen continuously. Or when something's oversold, it's got to stop there. It's oversold. And it keeps on going. Right? We keep seeing this, right? Markets just keep on going and going and going. But what I do see is the structure of them working from range expansion to range contraction, range expansion, range contraction. What do we see on the Thursday, Friday breakout from last week? Range contraction for the last 3 days. That's what we take advantage of. So I can measure that on the chart. I can understand whether something is about to range expand or about to range contract. When we see something like this go straight up like this, we're going into exhaustion. Or if it's going sideways, it's almost like coiling up like a spring. It's building up energy. So you can use this indicator almost like a fuel gauge. Full is up here and ready to go. Empty is down here and likely to consolidate or pull back. And we find this to be very, very accurate, especially if you use multiple time frames. So again, these are low energy, likely to consolidate down here. So we get a straight line move, ready to consolidate. So here was a great trading signal from Friday to Monday of this week. We got this big breakout on the S&P, boom, right out through 4,200, gone, obliterates 4,200, but it also exhausts the daily energy on that chart, as well as the 78-minute energy. 78 minutes is actually 5 times faster. So we use the family of 5 time frames, 5 times faster than a daily chart. That's why we use that odd number. So we had a great signal. So we got 2 trades in a row, bam, bam, right in there. Worked great. So we're going to initiate range-bound offense, options offense when conditions appear likely to consolidate and reverse. And we're going to pause when conditions appear favorable to trend. There's 252 trading days a year. We don't have to enter every single day. We're going to be snipers and wait until our target moves into our scope. Now let's talk about defense for a minute. When we are trading options, when we are selling options, basically what we're doing is we're kicking the ball off to the market saying, here's the ball, there's my goal line, I dare you to try to cross it. Couple of defensive definitions here for you. Static defense is one that's set up ahead of time before the trade is entered. So what I find is a lot of people don't know what their static defense is. So at the very beginning of a trade, what's your stop? What is your stop? At what point do you say enough? You've got to determine that at the very beginning of the trade. Static defense. So again, that's just my term. You're not going to find that anywhere else out there. An active defense is something where you're actually adjusting the risk envelope while the trade's still in play. A lot of people focus on the active defense, but they should be spending time on the static defense at the very beginning. The defense necessary for an iron condor will depend on the structure of the trade. They're not all going to be the same. So a low probability iron condor starting off, this is my static defense right off the bat. Here's the reward, or this is the risk actually, and here's the reward. And it's 1-to-1. We're starting with a 1-to-1. So no additional defense, no additional static defense is necessary. So what I love about this is that this allows me to sleep at night. because the risk of a black swan, I can live through that. Risk of a black swan on a naked strangle or a high probability condor, this is where you get those nightmares. This is where all those days during the pandemic in 2020, or some of the bear during last year, wiped out accounts. So when you have a trade like this, you've got to be extremely careful and set your static defense on this. You got to know ahead of time. You can't figure this out on the fly. You've got to know before you put the trade on exactly where you intend to get out. So there's a couple of different ways you can do this. You can do this either based on the number of points, which I don't recommend because that changes depending on implied volatility. 50 points away is different than it was a year ago, 50 points away. And that's because implied volatility changes. The realized volatility of the market changes. The ATR of the market changes. So points per day is a very poor way to do this. The second way you can do this is you can close at a defined delta of the short strike. So maybe you're entering at a 5 delta and you're going to close it when it gets up to 30 delta. I'm just throwing some numbers out there. That's fine. You can do that. And that does adjust for changes in implied volatility, changes in character of the market. The other way that you can do things is to close at a specific debit. So you'll hear people talking about things like, well, I'm closing out at a 1-to-1 stop or a 3-to-1 stop, things like that. 2-to-1, 3-to-1, 4-to-1, like that. So it doesn't matter. There's no one right answer. There's one right answer for the volatility and for what you are doing. So understand that there's no perfect static defense stop. One that's too risk averse will suffer from early exits. Like if you're saying, well, I enter at 5 delta and by the time the option gets up to 10 delta, I'm gone. The delta's doubled, I'm gone. Well, you're going to be very active closing down your trades. They're going to have a lot of early exits. And one that's too aggressive, say if you maybe enter at 5 delta and you wait till 50 delta, wait till the price gets up to that short strike, you're going to be paying a fortune to close that trade down. Legitimate exits will be expensive, but you're not going to have too many of them. What you got to find is one that works best for you. Stick with it. Here's where we get tricky now. An active defense requires much more skill and judgment to employ. Sounds cool to do an active defense. I'm doing an active delta neutral hedging strategy. There's a very good chance that a poor application of it will actually increase your losses. Now, here's one that kills me. I hate it when people do this. So let's imagine that we have a short call here. This is a bear call spread. And then above that, we have a long call, which is our hedge option. And so this is called a bear call spread. And I still hear advice to this day from people saying, well, if you get attacked on the position, what you do is you buy back the short call and let the long call run. That is the worst advice that anybody, I would say there's no professional that's out there that is going to advise something like that. So you've gone from being a neutral to bearish trader to all of a sudden a hyper trending, extremely aggressive, out of the money long call trader. Are you kidding me? So this is not an active defense. Never consider something like that. The traditional problem with an iron condor is setting up the trade and then having the price attack one side. All of a sudden you get this freight train trend like the one that we had last week. See it coming from a long way away. Yet there's nothing you feel you can do about it, right? So what you focus on expands. We've all been through that before. It's like you can't stop looking at your phone like and getting nervous about it, like. And that's the problem, because what we focus on expands, you're blocking out anything else that you can do. You don't see anything else that you can do. So our most common reaction is to hope that it turns around or focus 100% of our energy on the fear that this attack creates. You're going to be blind to any other opportunity. It took me a long time to get away from this. So the simplest method of active defense is simply to remove the position, get out of the way. It does require skill to know when to hang in there versus knowing when to bail out. So I found that the best hedge is one that is placed with a very good reward to risk that's inexpensive. So I don't use these hedges very often, especially with the low probability trades. The only ones I really need them for are the high probability stuff, which is not necessarily, or not necessary again with the low probability condors. So one last thought on defending a trade. Please don't use technical analysis to defend a trade. So what do I mean by that? Well, I've got a bear call spread and, but the market's overbought, so it should turn down. So that's why I'm staying in the trade. No, never do that. Never use technical analysis to justify staying into a trade. Only make exit decisions by the numbers, whether it's delta, whether it's debit, whether it's active deltas, anything like this. I had to learn this the hard way. Don't do it. So let's get into the system, and I'm going to be finishing up in just a jiffy here. We trade a variation of our strategy that best fits the current market. So the one that I'm trading now is not the one that I was trading a year ago. A year ago, the best strategy was the high probability, way out of the money stuff. The market was giving us free trades. It was overstating the volatility of the realized volatility. So the implied was way overstating the realized. So this made us, it was so easy doing the high probability trades. That changed around the beginning of the year. So a lot of people are complaining. I see it in social media, everybody griping these days like, oh, this market's so hard to trade. No, it's not. It's just that you're not listening to what the market's saying. The market's always trying to show you what the conditions are. Are you adjusting your strategy to match what the market is providing? Right? So if you're a batter, if you're on a baseball team, are you going to adjust your approach towards hitting if you get a different pitcher? Or are you going to just do the same thing you always do, regardless of who's up there? So here's what we're going to do. And I'm just going to go through this quickly. And I'm sure if you want to, you can get a replay of this video. You can kind of go back and see, you know, you can reverse engineer what we're doing here. It's not difficult. Okay, it's not hard, but not a lot of people can do it. So we're going to be adding positions every day that we have a green light 5 trading days out. So what are those green lights? That's the technical filtering that I showed you before. We're going to be creating low probability condors in the SPX. We're going to use 5 wide vertical spreads. Keep it small so that smaller traders can do these. Ensuring a minimum credit, this is very important, of 250. 250 with $5 of risk means that you're risking 250 to make 250. We're going to seek a 10% return on risk per trade after commissions. So that takes, so for the high probability trades, you're literally getting pennies in front of the steamroller. You're getting a much bigger credit with these types of trades, and it gives you the opportunity to do a lot more. So I'll immediately set up a 215 exit debit on the entire trade. Typically, it's out the next day, usually out the next day. Okay, let's talk about defense. Our black swan risk is set from trade entry. Black swan, if you've never traded through something like 2008, if you've never traded through, oh, let's see, it was May 6th of 2011 when we had the flash crash. If you've never traded through early August of 2011, where all of a sudden Standard & Poor's downgraded the United States of America. If you've never traded through the pandemic, March of 2020, those kind of things, then you haven't lived yet, right? If you've never set up a spread with that and you sit up Sunday night wondering if you're going to be still have an account on Monday morning, that's no way to live. That's no way to trade. I no longer lose sleep at night when the futures are moving with these things. So it's all set up at the very beginning. So black swan risk is set from trade entry. Now we can adjust these. We can do all kinds of things to adjust these. If we set up a trade like this, and if I get attacked to the upside, I can roll up the untested side, and I can do so twice with what we're doing here. I can roll that up twice. I can adjust it twice. So I can still win the trade if the price reverts back to the mean, which is very important. We have done that quite a bit too. So the most important element of the defense is starting out with a decent reward to risk. Okay. It is extremely important that you evaluate your results by the numbers and not your opinion. You've got to evaluate your results by the numbers, not your opinion, right? So you got to go through this. You have to understand what your numbers are telling you. You have to understand what your numbers are telling you and not your opinion. So this is our live tracking sheet. And you can see the win rate. You can see the winners, the losers, everything like that. Okay. So let me go through a quick example and then I'll get into the final close and take some questions for you guys. So here was a trade that we took on Monday. So this was on Monday, we were trading a 9 June iron condor. We got 255 credit. Couldn't get 250, 255. It was kind of in between strikes. We set this up Monday morning, immediately entered a 220 exit debit. So we're going for that immediate profit for this thing. Good till cancel. We established debit limits for the trade. And nothing else to do at that point. So we created a one-to-one reward to risk trade setup for this. And then we were out the next day. So you can see we got in at, let's see, 11:19 in the morning, and we were out the next day at 2:43 in the afternoon. So we secured a 10.53% return on risk in about 28 hours of hold time, which is what we want to do. We want to do this every single day. So the performance since service inception, we started this service, Dave and I, and 6/22. So it's been almost a year now. So out of 267 trades, we won 242 of them, 90.6%, 1.75 profit factor. Through all of those trades, anything above 1.5 means you're printing money. And the performance of the low probability trades, which I'm most proud of lately, has been super. 5.78 profit factor, 96.67%. So take those to the bank. So let's wrap everything up here. Thanks everybody for your patience. I know I'm running a couple minutes over. Nothing I've talked about in this presentation is new. Traders have been selling iron condors in the SPX for decades. So why is it that so few are profitable? Perhaps they lack the discipline. Perhaps they don't have a system. More than likely, they will lose confidence and give up after the first loss. Confidence must begin by gaining knowledge and then applying that knowledge to learn to win. I see so many guys doing this. Ladies and gentlemen, that are learning how to trade. They'll invest into a program. They'll take a couple of trades. If they don't immediately get confidence and immediately positive feedback, they're going over here, running over here to the bright, shiny penny of the new strategy, the next new thing. And then they'll put a couple of trades into that. And that doesn't work out because they're not putting the time in, and they'll go running over here. And eventually they go back to where they started from. So instead of getting 10 years of experience, you get 1 year of experience 10 times. This is what we all do. So if you need one piece of this puzzle or maybe several pieces, consider joining me at the 12-minute trading daily target 100 service. We're looking to make 100% return by the end of the year. So we meet as a team every day in a live trading room. That's me down there, poster child for Rogaine, right? So I share my live screen. We take live trades right in the room. There's no secrets here. There's no black boxes or anything like that. I explain exactly what I'm looking at and what I do. We enter trades every single day to give you reps in the system. If conditions don't warrant a real entry, I'm not going to force it. I'm not going to pound that square peg into a round hole. All of our live trades are posted on our class portal with email and SMS notifications. They're backed up by a live tracker. So yeah, we get text messages backed up by a live tracker. You get everything like that. So you can see some of the things that we do. Here's the trade updates that we do. Here's an explanation of like a trade updates. Here's the SMS that we send out. We have a whole course that's out there. So if you're brand new, I've got an entire course that's out there that's built up so you can walk through exactly. There's no secrets to what we do. There's no black box. There's no, hey, just take the trades and we'll sell you a $5,000 workshop to teach you how to do it. No, everything is open. We're here to teach you how to do this stuff. That's my only goal, is I'm not trying to hide anything at all. So each day in the trading room, we do a full read on the market, an evaluation of current inventory, what we're doing with current positions, plus new trade entries, which are entered live in the room. Every day is a live coaching session with me with an experienced wolf pack at your side. So think about that. So today's webinar special. I understand that everybody's getting, all bombarded by all kinds of offers and everything like that. You're confused. You don't know where to go. 2 weeks of free trial. So you can join me for 2 weeks. You can join us for 2 weeks, no charge, no nothing. See if it makes sense for you, right? Go to 12minutetrading.com/summer. If you spend 2 weeks with me live, if it works for you, it's only $147 a month to stay. Cancel at any time. So what a lot of people do is they'll stick around for a few months, they'll learn it, and they'll get to the point where they're good, where they know exactly what they're doing. A lot of them will stick around even after that, but it's like, birds kick the fledglings out of the nest at some point, right? We want you guys to fly. So please don't miss out on the free trial. It's going to be taken down soon. By the weekend, no risk to try it out. And I hope you get a chance to meet us and our wolf pack as well too. I think you'll be impressed. So let me know if you have any questions. Thank you very much for your patience and staying a little bit later after 5 o'clock today. And with that, I'll take questions, guys. Let's see if there's anything I missed.
I gotta just tell you something really quick, Don. That's crazy. Free 2-week trial is crazy. That's awesome.
Yeah.
What a great offer.
Yeah, it's, we just want to show that we're real. And I think most people, once they, we are here to help people. This is what I live and breathe, is helping people. And, this is why I'm called the doc, right? So what platform do I use? We take trades in 3 different platforms online. So I take trades in E-Trade, I take trades in Tastyworks, and I also take trades in Thinkorswim. That's all I have. I don't really have anything else that I can use. And really, if you're not trading on one of those, I think you're at a huge disadvantage in the option space. Any other questions for today? Any other questions for today? Yeah, this week was like a great example of like, I read social media. I'm a part of a lot of different groups that I look for ideas. I look for ways to improve my own trading. And so many people are just finding this market so tough to trade. And it's really not if you just spend the time to stop and listen to what the market's telling you. So we do things in a slightly different manner, and we do things in a very logical manner, which makes sense. Okay, so it's 12minutetrading.com/summer. Let's see, who else is out there? Do we have anybody left here?
Any other questions, people, guys? I think this is awesome, a 2-week free trial after, all the presentations we've seen today. Guys, you just need to go to 12minutetrading.com/summer and get signed up. Before you log off.
Yeah, I love the business philosophy. It's I'll eat what I kill. So I'll let you try it for 2 weeks. If you like it, you stay, I make money. And if you don't like it, then you leave. But to me, when is the trading room open, Doc?
Trading room is open at 11 o'clock in the morning Eastern time, 11 o'clock Eastern time. So that gives us a chance to settle out the morning volatility and get a read on where the market's going. We're not losing that much edge by meeting at 11 o'clock. A lot of people also can work that into their lunch schedule, so it's not like first thing in the morning. There was a question also on options on futures. We don't necessarily trade options on futures, but everything that we do can be traded on options on futures. So there's really no difference there. It's just that, you know, they're open 24/5. We'll work through the website. When we sign up, will there be an easy way to exit if it does not work out? Yes, you do not have to. It's not like we're a cable company. We're not Comcast. We are, we allow you to self-service your own account. So if you want to cancel, you can do that right from the platform on your own account. Yes, you do have to set up the credit card number. I'm sorry about that, but we're not gonna bill you unless you want to. So it's no problem. What time of day do you usually enter into the trade? It's usually around, I would say our trade entries are normally around 11:15 Eastern time, 11:15 Eastern time. If there's adjustments necessary, typically I wait until the final hour of the day to make adjustments, because that is when the pros are making known which way they want to push the market around. So sometimes there'll be an update at the end of the day, but it's not like I'm sending updates all day long. It's usually updates go out as we finish up our live session, boom, so that people that can't attend feel like they're right there. And we also do live sessions from time to time as well, but every day is a coaching session as well too.
Yeah, I was just going to say that that's one of the things that you're doing. You're not just trading. They're not just watching you trade. You're teaching them along the way, and you're helping them with their own trades. And it's really education all day long, as well as companionship. They're hanging out with a group of people.
So Oliver is asking, what's your biggest reason to prefer options trading against futures? Now, I'm not sure, Oliver, if you're talking about options on futures versus index options, or if I'm trading options themselves versus trading futures. With trading futures, you cannot, that is a 100% directional trade. So if I understand your question, Oliver, as like trading options directionally versus trading futures directionally. When you're trading directional futures, you cannot sell premium there. So that is a direct speculative directional trade if you're trading futures, long or short. Okay, does that make sense? But you can do options, or you can do options on futures with the micro E-mini or the ES, or for that matter, the MNQ or the NQ or any of those. You can do the same thing. How many trades have you taken in 2022? 2022 or 2023? We've taken 30 of the we've taken 30 now of the low probability trades. We've taken 30 of the low probability, and we switched over to the low probability in let's see, back in February. So again, we're not taking these every single day. A lot of people, you know, want a trade every single day, like, you know, like clockwork. And I don't do it that way. I trade when we have the odds in our favor. I want you to feel successful. I want you to have confidence that when you put a trade on, there's a very, very high probability we're going to win that thing. I see a lot of problems with people that want to trade every single day and like the multiple entries every day and stuff like that. And those are the people who are just getting beat up right now. Okay. Any final questions? Thanks everybody for your patience today. Rod and John, it's been a joy being with you guys here today. Appreciate all your effort and your help getting everybody in the room. And I will look forward to talking with you guys in the future. Thanks, everybody.
Thank you very much, Doc. The pleasure was all ours. You know, I really learned, and I'm happy that this was the last presentation of today, because I will have like all the information in my head ready to go. So thank you very much for being here, for being, you know, such a great teacher. So for having patience also at the beginning with the technical inconveniences. For us, it's a pleasure. So everybody, I just posted our agenda for tomorrow there in the chat, so you can grab it and take it from there. And I don't know if anyone wants to ask a last question to Doc. Otherwise, we're going to let him go. And thank you so much for being here. And we hope to have him again in our next summits and events. I really like his presentation. Thank you very much, Doc.
Thank you, Rod. Thank you, John. You guys take care.
There's also a link in the chat, guys. So you can jump in there and grab that link.